Hey, what's up guys? It's Online Money 24/7 and today we're going to be talking about why most people lose money in the stock market. So, number one, people buy low and sell high. Now, this is what you're supposed to do. You're supposed to buy low and sell high, of course, right? Thing is, most people don't actually do this. Obviously, as you can see in this graph here, you buy low in the dips and you sell on the spikes. The thing is, most people don't actually do this, and I'll get into that into the next slide of what I mean by this, that most people don't actually buy low and sell high, which is what you're supposed to do. This is the whole point of the stock market, is to make money, right? Thing is, what most people do, I'm using Shopify here as an example today, is that what people will do is now, if you're smart, you buy in there around the March period, which is it was a little over $50, and if you sold around $100 or kept it, because it's kind of stayed around $100 now over the past few months, you would have made 100% return on your money if you bought it at $50 and sold it at $100. And Shopify's had an amazing year, and it's all about spotting trends early. However, if you were to buy around the July period or buy on the hype of September and then sold in November, you would have actually lost money depending on when you bought and sold if you bought in at hype periods. So it's about spotting the trends early to buy at a lower price than what the company's actually valued at. Because at this point, Shopify is kind of sitting around $100, and it's been around $100 for the past few months, and it hasn't really moved much since then, because that's about what the company's valued at right now. Earlier this year, it kept trending upward because the company kept being worth more. And there's a lot of other reasons why it's been sitting around 100. There's a lot of media coverage going down on Shopify, kind of shooting it down every time you see that big spike dip. As you can see after the September, there's a big dip down on the right there. A lot of that is due to negative media, but this is just an example within Shopify that I'm showing you if you don't buy low and buy in at a hype period, you could actually lose money, and that's where a lot of people lose money, is they buy in on hype. So, number two is to not buy unsafe or penny stocks. So, you want to keep yourself as far away from penny stocks as possible, because at the end of the day, they aren't worth your time, and they can lead you to lose a lot of money, and it's effectively gambling. Don't go out there and buy unsafe and penny stocks, because companies that are worth literally pennies are not actually securely backed companies with any kind of safety net. You buy into this random things hoping that they go up a huge percent the next day. What if they go down a huge percent the next day? You might have just lost a few $1,000s. It's totally not worth it with the way that penny stocks fluctuate at all. Just stay far away from them, because they're not worth your time. It's basically just like throwing your money into the pit. It's gambling. Stay away from penny stocks. There's going to be a whole bunch of people out there trying to sell you on penny stock trading. It's not worth it. What you want to do is buy safe stocks. So what is a safe stock? Well, an easy example of this is something from the S&P 500, which is generally a large list of companies that are quite large and been around for a little bit and have some secure backing. Now, not all of these companies are great to invest in now, but do your research. A lot of these companies that I have here in this picture, such as Adobe, Google, Facebook, Disney, Coca-Cola, McDonald's, a lot of those companies are very big. Johnson & Johnson as well, Microsoft. A lot of these companies are very big, secure companies that are safe to invest in. Now, not all of these companies are doing amazing right now, but just do your research on them and just take a look at what are some big brands that you believe in, that you trust in, and want to put your money into. Because if it's a safe stock, the whole point is for long-term investing in a company that you believe in and that they have a secure backing, especially when you're first getting started. It's very important to do that, because what's the point of jumping into a random stock just to hope for your money to go up? It's much better to do actual research and purchase safe stocks. So this is just a short list here with some pictures of safe stocks that you could get invested in. But that's what you want to do, is you want to buy safe, big stocks that aren't going to disappear in the next day like a penny stock might. You want to be buying safe stocks that are going to be here for the long run, that have a long-term growth potential. Because at the end of the day, you want to go long-term versus short-term. So an example company that we're looking at today is Johnson & Johnson. I actually invested in Johnson & Johnson myself, but this is a great example. If you were to have bought in around the about 2015 era, and you had, looking at it now, wow, the money's gone up a lot. You've made some money on Johnson & Johnson if you bought it in 2015 and you still hold the stock in late 2017 moving into 2018. But if you had sold back in around, you see the dip there in the late 2015 time, you see that downward slow trend. If you had sold, I think it looks like about November 2015 time, roughly. I don't know exactly what month that dip is in, but you see what dip I'm talking about to the right of the red circle. That trend downward, if you sold there, you would have lost money in the short term. But if you were smart and held your stock in the long term, you would have made a good, nice profit on your Johnson & Johnson shares. So it's all about the long term versus the short term, because a lot of stocks, especially bigger stocks, are very slow to move. And sometimes it may seem like they're kind of not really moving anywhere. But at the end of the day, they're going to keep going up because the market is generally trending up and the economy is doing well. The stock is going to go up. It's just you have to believe in it and not get discouraged when you see your stock going down over the course of a few months. Just realize that you're in this for the long term, and then over a few years, things will bounce back and start trending up again. It's just how the stock market works in general when the stock market is doing well. And even if its stock market's not doing well, it trends down a little and then it goes back up. It goes down, comes up. At the end of the day, you're going to make money in the long term if you're smart and don't mess around with the little short-term fear trading because you see your stock going down. Especially a big company like Johnson & Johnson, that's not going to disappear in the middle. I mean, they've been around for years upon years upon years, over 50 years, 100 years. That company's not just going to poof out of nowhere. So any of these big secret companies, if they're going down a little bit, they're going to go back up. If they're doing well, they might just be having a tough quarter, or they're just not really moving much. So keep your mind in for the long term and don't get discouraged by little short-term fluctuations within your stocks. Number 5, buy stocks you understand. This is a very important thing to do when you're buying into companies. So, company that I'm actually invested in, McDonald's. I understand their food. I like their food. I love a nice McChicken. And so I bought McDonald's shares because I understand the business model, what they are doing, the food that they sell, and that they're an international brand, and that they have a huge domination on the fast food market. And so I understand the company and what they do. Similarly to Apple, I actually don't currently own any Apple shares, but iPhone. I use my iPhone every single day. This is a company that I understand their technology. I understand when they have a new product that's coming out on the market, whether it's a laptop, a tablet, a phone, a watch, whatever. I'm usually seeing that because I'm a tech guy, so I like to see when the new Apple products are coming out. And so if I were to, Apple is definitely a company that I could see myself investing in the future. And, at the end of the day, you want to buy stocks you can understand. So both of these companies are stocks and companies that I understand well about how they make their money, if they're doing well in the market, and what their total domination is. These are huge corporations, and it doesn't seem like Apple's going away the next, tomorrow, or McDonald's is just going to disappear tomorrow. So these are great companies, if you understand them, to get invested in. Those are just 2 examples of personal companies that I understand well that are large companies that are safe to invest in. There's a ton of other companies out there that are safe to invest in as well, but it's all about if you understand them. What do they sell? When they release new things on the news, are you following the company and seeing what they're up to? Do you use them on a daily basis? Do you really understand what they do, what they sell? Because if you understand the marketplace a little bit, you don't have to know everything about the company, but if you at least just have a good comprehensive understanding of what the company sells and does, that's going to set you way ahead of other random companies that you have no idea what they actually do if you're just looking at the stock numbers and the trends. You want to actually understand the company you're investing in, not just the trends that you see on the stock tickers. You want to see and believe in the company that you're investing in. So, number 6, do your own research, That goes right along with the last one, to buy stocks you understand. Do your own research on your stocks. Don't just buy into hype of what other people are saying. Do your research on stocks and figure out what companies you want to invest in, because at the end of the day, it's your portfolio, it's your stocks, and that's going to lead you to having the best returns and not lose money in the stock market. It's by doing a lot of your own research on companies that you want to invest in. So if you guys do not actually have a brokerage app, the brokerage app that I recommend is Robinhood, because it's free stock trading, no commissions on trades. It's awesome. That's what I use. And if you want to support the channel, there is a link down below in the description. And you get a free stock, I believe, if you click and sign up with that link. So guys, if you have not subscribed to the channel, subscribe to the dang channel. What the heck are you doing? Leave a like, comment down below if you have any questions, comments, concerns. Anyway guys, that's all for today's video, and I will see you in the next one. Peace out.